Welcome to the March 5th, 2021 video version of the Wagner Daily. My name is Rick Petticelli, and as usual, once a week, this video replaces the written commentary portion of our report. Hopefully it serves a nice change of pace, as well as offer some insight as to how we set up our charts, what time frames and indicators we use. On the left-hand side here, we have the daily chart with the 5, 10, and 20 EMAs, a 50 and 200 SMA, as well as an RS line versus the S&P 500, and volume with the 50-day moving average. On the right-hand side, we have a weekly chart with the 10 and 40-week MA and a 200-week MA, and a volume with a 10-week moving average. First up, we're going to run through a few broad market averages, and then we'll cover a few sectors that are showing relative strength, and finally, we'll wrap it up with thoughts about our game plan over the next week or two, what we're looking for in the market. So first up is the Nasdaq Composite, which after stalling at the 20-day EMA last week has followed through to the downside, slicing through the 50 MA and a big support level at 13,000, and now looks like it's possibly headed to the 12,000 area. We say that because that's the projection of this head and shoulders pattern, and here's the left shoulder, the head up here, and the right shoulder. So from the head to the bottom of the right shoulder is about an 8.2% drop. So an 8.2% drop from the low of the right shoulder projects down to the 11,900 area. So say 11,900 to 12,000 would be support. But that is a projection and not a prediction. As we know, the price action is going to do what it's going to do. And who knows, the Nasdaq Composite could set a lower low on Friday and then reverse on Monday and not go any lower. So again, that's just more of a guide. So in the short term, it looks like the Nasdaq is in some trouble here and could continue to sell off. The S&P 500 sliced through the 50 MA for the first time since the rally began back in November, and quite the pickup in volatility the past few days. And we'll just have to see if this is an undercut that leads to a recovery back above, or if the S&P is breaking down below the 50 and joining the Nasdaq. IWP is the Russell Midcap Growth ETF. We track this ETF because many of the holdings are stocks that we traded last year. Much like FFTY, it's just a gauge to see how growth is holding up. And as you can see here, it's fall through to the downside, joining the Nasdaq. And also has this head and shoulder type look. So the first sell-off was about 9%. So projection of another 9 would be around 93. And then last is the Russell 2000. Broke the 20 EMA for the first time since November and closed just above the 50-day MA. And we'll just have to see how this ETF reacts over the next week, whether or not it's bottomed out here and now it's just going to start to go sideways, or if it's going to follow the Nasdaq and break down below the 50 MA. As for sector charts, most look like the S&P 500 or the Nasdaq below the 50 MA. There are two sectors that are showing relative strength. One is the energy sector, which continues to set higher highs and higher lows. And then the financial services sector, which is currently in consolidation mode, but is still above the 20-day EMA. So we're going to wrap this video up with our expectations over the next few weeks. What we're looking for is simply for the Nasdaq to stop going lower. We want to see higher lows form for at least 3 to 4 days, which would give the index an opportunity to print a follow-through day, which is a 1.5% or more advance on a pickup in volume over the prior session. And while it's important to see a follow-through day, it's even more important that we see bullish chart patterns emerge over the next few weeks to confirm the follow-through day. So we're going to have to show a lot of patience here as we wait for new setups to emerge. And I know that can be tough to do. It's tough to sit back and do nothing. Patience is just so underrated here. When conditions are not ideal, especially for can slim traders, there's just very little good that can come from trying to catch a bottom or trying to get too cute with an entry. it's best to wait for conditions to improve and for the wind to shift and get behind our back here. And while we wait for conditions to improve, there's certainly some work to be done. We have to create a new watch list. And with our watch list, we want to focus on relative strength as usual, especially coming off a decent correction in the market. We want to focus on stocks that are holding above the 50-day MA, as this is the average that the Nasdaq is trading well below. So if a stock's above the 50, that's relative strength. If it's above the 20, even better. And just to give a few examples of relative strength, these are stocks that are currently holding up better than the Nasdaq, but the Nasdaq has yet to bottom out, so we don't know where these charts will be in a week or two. But anyways, Twitter's just recently broke the 20 EMA, but showing quite a bit of relative strength. Billy is holding above the 50 MA. ABNB at the 50 MA with a nice reversal on Thursday, if it can hold. We have FUTU still above the 50. And of course, DKNG, which was one of the strongest stocks until the past 2 days, at the 20-day EMA. Our short-term plan remains the same: to stay in cash and stay patient and wait for conditions to improve. All right, that's a wrap for tonight's video. Thank you for joining me and have a great weekend.